Well, here we go again. Another great day comes to an end. Hope you guys made some money out there, but it's back to work tonight, Tuesday evening. Got a big day coming tomorrow. Getting ready for Wednesday's trading session. We have a lot to cover and a lot of great trades setting up for hump day tomorrow. I'm going to cover all my favorite trades in tonight's video to make sure you have a game plan to make some money tomorrow. Before we jump in and get this party going tonight, as always, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And I appreciate you guys tuning in tonight. If you enjoyed the video, do me a favor, will you? Hit that like button for me. I appreciate you guys supporting this YouTube channel and tuning in. But enough of the intro, right? Let's get ready for Wednesday. Get some big news coming tomorrow. We had another big move across pretty much all markets here today. Everything's pretty much bullish right now. I'll tell you, the S&P and the Nasdaq, right? Nasdaq has that nice pendulum swing coming off the low. S&P, lots of bullish momentum right now. Definitely looking for breakouts. Definitely looking for, I've got, 4 different breakouts we are watching for right now on the Emini and the Nasdaq. So we definitely have some bullish breakout patterns I'll be watching here for tomorrow. We'll talk about those here tonight. But let's not forget, this is day number 2 of a very big bull rally. And we made those strong runs up. We're now retesting that high. Is this the moment the bears come in and remind us we have a big bear bias right now? We're going to find out. So we definitely do have some reversal setups we're tracking for. But again, a lot of breakout possibilities here on the Nasdaq and the S&P. And because that long-term bear bias is still in play right now on the dailies and the 4 hours, we are certainly looking for, or keeping our eyes open for, some reversals on the Nasdaq and the S&P. Oil, of course, you can see oil is all curled up right now in the fetal position. There's an OPEC report coming tomorrow morning. Rumor has it they're going to cut production by not just 1 million barrels per day, but 1.5. We've got some great buy zones down there around 85. Got some big channels. Would love to get some nice deep pullbacks here on the oil. We'll get some breakouts going higher there as well. So lots of bullish breakout trades I'm following for tomorrow. Got some reversals and definitely some pullbacks. Got some great pullback zones across the board here, across NASDAQ, S&P, and crude oil. Now, we're going to go into each one of these charts here in just a moment before we jump in and take a look at each of these charts here for tomorrow. Don't forget the schedule for tomorrow. Big news on Wednesday, October the 5th. The big news for oil traders is definitely that OPEC meeting. Like I mentioned before, they are discussing whether it's going to be 1 million or 1.5 million barrels per day production cut. They're trying to keep this pendulum from swinging too far back towards that big round number of 50. So that is definitely something. Keep in mind that announcement usually comes around 7:30 to 7:45 Eastern time, so it'll be just before the U.S. session begins. Hopefully things don't get disturbed too much because we got some great buy zones, some dip buy spots there on the charts tonight. But that is the big news for oil traders. As we go later in the morning, the big news, of course, is that ISM Services Index. We saw a very disappointing ISM Manufacturing Index on Monday, and we're going to see if the services sector is taking a hit here at 10 o'clock tomorrow. If you could only be at your desk for an hour tomorrow, I would imagine that 10 o'clock to 11 o'clock block is definitely something that you want to keep on your radar. So if you're an oil trader like we are, definitely keep in mind that OPEC report, 7:30, 7:45. Be aware of that. And then later on in the morning, don't miss that 10 o'clock shock, as we always say, as we have that ISM number coming out. But we'll definitely be watching that tomorrow in our morning trade room. That is the news here for tomorrow. Remember, we're not paying too much attention to the Fed speakers. Everybody will shift their attention to the employment number on Friday. We're going to talk about that number in tomorrow night's video, so make sure you come back and tune in tomorrow night. Back to our charts, though. The money is on the charts here. Now, guys, whether you trade one of these markets or you trade all of them like we do in our trade room, make sure you watch all the way to the end of this video because you'll learn something new throughout the entire video lesson. And I do try to save the best stuff all the way to the end, so I'll give you a reason to stick around all the way to the finish. Take some notes, take some screenshots. Any questions, drop them in the comment section for me. Let's go NASDAQ, we'll go S&P, and we'll wrap tonight here on the crude oil futures. Now, a heads up on this is a 5,000 tick chart. You can see all the time frames in the upper left-hand corner of the chart on your screen. And also, to be aware, too, the NASDAQ can also be applied to the QQQs, the micro NASDAQ, and also keep in mind, too, the S&P and the NASDAQ are very similar. So Pretty much everything we talk about on the Nasdaq can also be applied to the S&P and vice versa, right? The SPY, the S&P, they're all very, very similar here right now. I digress, though. Let's get into it here. There are 3 key insights that are telling us where the biggest money-making opportunities are for tomorrow. The first one is the overall bear bias. This does not look very bearish right now. You're definitely right. But look at the daily chart. Look at the 4-hour chart. We are still very much a bear market overall. We have had a couple days of very bullish runs here. And why is a bear bias important? Well, a bear bias is important because I want to keep my eyes open for reversals. And we definitely do have a couple of reversal patterns on our radar we'll talk about here in this video tonight. The second key insight here is that strong move higher. Anytime we see a strong move in one direction, we expect to pull back and we expect buyers to want to retest that high. Now, very, very important for tomorrow. At this point, a lot of bullish momentum coming off of this low. Buyers have a lot of potential to break out. And again, I've got 4 different breakout patterns I'll talk about here tonight. And those are the money-making breakout patterns I'll be watching tomorrow in our trade room. But listen, if they can't get that breakout to happen, all of a sudden now this becomes a bit of a trading range. And so now we start looking for that rotation lower and we start looking for buying opportunities down below those lows, or do I dare say possibly a reversal back down to some key levels waiting down below. So this is a very critical moment here right now for the buyers. Strong move, the dip buyers. We talked about this channel last night on the video. We talked about if it kept going higher, wait for that, trap them in and back up to retest the high. The dip buyers, the patient buyers, they got paid today by staying patient on it. Now the big question is as they go back up to retest the high, are we going to get that blast and run higher, or does this now turn into one big trading range and we start looking to pick off some of those bottoms down below, or possibly a full-blown reversal? That is the second key insight. The third key insight, another very bullish clue here. We talk about these quite a bit on this YouTube channel. Anytime I have a trading range, we break below that trading range, and now we begin that what we call rotation off the low. As the market now rotates off that low, again, if it doesn't stop at that high, it's going to want to punch, right? And oftentimes it'll punch roughly about equal, right? The amount below, the amount above, and that really puts us now up around that 11,763 and a quarter area for a breakout resistance level up overhead, and that puts us right around that same area of resistance we talked about last night, right? 11,800 there for the buyers in the Nasdaq. If they can push through that area, we get a big juicy range. I would imagine the Nasdaq traders, the buyers, would love to get back up into that range tomorrow. 11,900, 11,950. That seems to me to be the big bull target for the buyers tomorrow if they have it their way as we go. Similar stuff on the S&P. We'll grab that here in a moment. So now that we know the kind of the key insights on this, we know the range is a magnet. We know we're trying to retest this high right now. Let's get rid of that channel, because that channel is not going to help us here for tomorrow. How do we make money on this? Well, really, like I mentioned before, there are 4 breakouts going higher. Let's talk about those. And then later on in this video, I'll talk about as we go lower, because there are some shallow traps we can use, some deeper pullbacks we can use, and we'll talk about if this thing turns into a full-blown reversal here. So how do we trade the breakout? There are 4 breakout patterns you're looking for as we go higher. And again, I'll talk about the short side and the pullback side here in a moment. The first one is that classic 1, 2, 3 breakout. Look for them to pop through that high. Look for a pullback to the moving average, a strong jump off the moving average. Anytime I see a 1, 2, 3 breakout pattern out of a trading range, it makes our job very, very simple. Find that trend line off that high, find a channel off that low, go out, look for those prior swings, get under prior swings, that's where traps live, get underneath the 21 moving average, that's where failures live, and then grab that failure into pullback combination. Now remember, on these 1, 2, 3 breakout patterns, pop up, pull back, jump. That's the key. Strong jump off that moving average, right? Cannot be a small push. It's got to really take flight and blast out of that trading range, or else, again, those bears are going to gobble this thing up and take it back lower again. Mark off that high, mark off that low, and again, looking for the entries, which using any of the entry setups that you guys learn in our free classes on the website. Where's a good target for this? We talked about the range overhead. Don't forget, though, the first leg and the third leg of this pattern is very accurate when it comes to finding that final exit. So again, that trading range above us, which I mentioned before, is kind of the big juicy target for the buyers, but you really want to use that first leg and third leg technique that'll really help you to kind of fine tune those exits. Another one for tomorrow is that pop and grind. We pop up, we grind higher as the market pops and then grinds. These ones are easy. Mark off that high, bring it down to that big low, right? That's the key there, right? It's a lot like the channel that we saw here today, right? It kind of pops up, grinds higher here. You're drawing that trend line off that high, bringing it down off that low. This is not really rocket science, right? It's just waiting for that pullback and underneath some prior swings. We talked about that quite a bit last night. If you were paying attention, you knew exactly where to buy that dip today. If it pops up and begins to grind going higher, same thing. Mark off that high, mark off that big low, look left, find some of those prior swings. Again, I like to get in underneath prior swings because that's where usually the best entries are going to be. Prior swings or traps or failures below the moving average, right? Once those bears come in and try to get short, we have all of that bullish momentum. They're going to want to retest that high, and we can buy right into those stops. So any of the entry patterns we teach you guys in that free trading course can be applied at the low of that channel. Another one here. This is the most extreme. Let's say we really blast, right? We blast up, real strong overnight. Something happens overnight. I don't know what's going to be at this point, but something happens overnight. Big breakout going higher, strong move, shallow pullback, higher high in price, traps, baby. This is the most aggressive one, but if you see this thing just blast, right? This thing blasts up overnight or early tomorrow morning, anytime, it's really any point tomorrow, we get that shallow pullback. The shallow pullback is the key on this one because it's not letting anybody get in. And then once we get that higher high, bingo, that trap is an easy money trade. Think about first leg, third leg, right, for that target going higher here. And the fourth breakout pattern going higher here is, let's say something happens overnight and the market makes an enormous move higher. Anytime we see a really big move overnight or a big move in the pre-market, the first thing I think of is this is too high to buy. I don't want to chase after it. The key to these, whenever we see these big moves overnight, or anytime we see a big move in general overall, is you want to try to buy low. This is a very important part of the game plan. You want to buy low. How low? It's pretty easy. What we'll do is we'll go out and we'll find some bigger channels. I'll draw them backwards off that high. I'll find some channels like this. Then I want to wait for that nice steep pullback. Eventually, buyers will dry up here. I realize it seems that this market's going to keep going higher forever, but eventually the buyers will dry up, and we oftentimes, after a very big move in one direction, we oftentimes see an even big, almost as big, right, collapse off that high because bears begin to sell into it, buyers take their profit, and so oftentimes that market pulls back pretty sharp. That's exactly what we want to see. We want to get underneath that moving average, and what I always tell my students is when you get that pullback, once that pullback starts to accelerate and go lower, and in that little voice in your head says, oh my goodness, maybe they're reversing it, right when that little voice in your head says, oh my God, they're going to reverse this thing, bingo, that's usually when it's time to think about being a buyer. Once this thing accelerates, and it's kind of a classic move, right? You'll get that big move up overnight or that big breakaway move. We don't want to chase after it. We want to buy low. Again, how low? Find a bigger channel, right? Get underneath that moving average. And once it begins to accelerate, and that little voice in your head will say, oh my goodness, right? Can I even buy this anymore? That's exactly when. Hopefully now at this point, the bears will come in. They'll come in and try to sell off it, right? Hopefully all the rookies who are not watching this video tonight, they're going to get spooked by it. They're going to see that really sharp pullback. They're not going to realize that anytime we see a strong move in one direction, we're looking for a retest of that high. And once those bears come in and get short off that moving average, bingo. Think about where their stops are. Think about where their pain is, right? And we can buy literally right into those stops for what is usually a very, very easy trade. Target is back up to retest the high. I always say this in my video classes, in my trade room. The easiest money you're going to make in any market is when you have a nice strong trend and you've got the counter trend traders trapped below the moving average and off some level of support, right? Like a hidden channel like this. We talk a lot about these types of seller failures, buying into stops. We talk a lot about that stuff, as you guys know, in that free video course, which reminds me, I've talked a lot about traps and failures and breakouts. I know most of you guys have taken the free classes. You learned all of these setups. I know you're making money with them because you send me great screenshots every day and comments on the YouTube channel. But listen, if you're here for the first time, if you haven't taken the free classes yet and learned the traps, the failures, all the breakouts, most importantly, the rules to make money with them, what I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link, take our free trading course. You're going to love it. The strategy that I teach in that free class will make it so much easier to know where the winning trades are. You'll laugh at how easy it is to avoid some of the common losses. And most importantly, that free course, the strategy I teach, will give you a ton of confidence every day because you'll have a roadmap to follow. It gives me a lot of confidence, the roadmap that I teach in that free class. If you're missing too many good trades, if you hate taking so many losses right now, take that free course. It is perfect for someone trying to make the jump into full-time trading. That way, the next time I do get that big move up, that deep pullback, you're going to know, strong move, trap in some of those bears below the moving average and look for that snap right back up to retest the high. Those are the 4 breakouts we are watching for as we go higher here. But now, let's cover the opposite side on this, right? Let's cover the opposite side right now. I mentioned earlier that if we don't get that breakout, right? Because it's a very good chance we won't. There's a very good chance we won't get that breakout. Strong move up, they want to retest the high. If they can't get that breakout now the market's going to want to rotate back down. Now, there's going to be some shallow pullback opportunities here. You bet there will be, possibly, right? We're ready for that. And we definitely have to see about that deep pullback here. And again, that may turn into a full-blown reversal. I want to talk about these because these are very realistic setups we can look for here tomorrow. Let's do that, though, over on the E-mini. Looking at the S&P 500, S&P, of course, very similar here to the Nasdaq. This is a 10,000 tick chart there in the upper left-hand corner. And again, you'll notice they're very, very similar, right? The key insights right now are pretty much the exact same, right? We do have an overall bear bias, which again, we have to respect those resistance levels overhead because we do expect as the market goes higher, there are more bears coming in. We definitely do want to be aware of some sell setups and reversal. We'll talk about those here on this chart here right now. And then, of course, the strong move. Right now, look at this one. This one made that strong move. And again, all the patient buyers were very much rewarded. We talked about this today in the trade room. Very much rewarded with that nice dip buy off the low of that channel. And now we're back up to retest the high. So again, just like on the Nasdaq, do we bust through that high? Right, get some levels waiting up overhead, 38.46. If the buyers really get what they want tomorrow, 38.90, 38.80 for the buyers in a breakout going higher. We talked about those 4 different breakout patterns, right, going higher. We can definitely use those on the S&P as well. And of course, we have the range rotation. Right, that range rotation. This is a really big clue. It's a very, very significant clue. Bull market into a range. We pull back as we rotate higher now. A lot of momentum right now trying to punch this thing going higher. But again, this is day number 2 of a very big, strong bull rally in an overall bear market, right? Is this nothing more than a setup for the bears? We're going to find out tomorrow, right? We're going to find out tomorrow. So we have the plan put together. We know how to buy this thing as it goes higher. That's kind of the easy part right now. The harder part is, how do we buy it as it goes lower? So as we look at this thing going lower, you have to think there could easily be like a channel coming across these lows, right? This could be widening out into a bigger channel. So there definitely are going to be shallow pullback kind of buying opportunities here. The problem is, though, is that we're buying very high at that point. So as we go lower, let's say we go lower here and there is a channel coming in here. Right? I like the idea of buying the low of that channel. I really do. The problem is, though, is that we're very, very high up. And so whenever we're trying to buy into a level of resistance in a bullish environment like this, we have to remember that there aren't going to be as many buyers here as there will be down here, right? There'll be a lot more buyers down around that 3750, 3760 area, right? That's really where you want to be buying here if possible. So there's a lot of buyers waiting down there. Why? Because that's where you can risk small to earn large. Right? You know the buyers are going to be more plentiful there. There's more buyers down there because that's where you can take a small amount of risk for a bigger amount of reward, right? Target, of course, is back up to retest the high. I can't get a good risk-reward ratio with a shallow pullback. And by definition, when you can't risk small to earn large, you're not going to be able to get the big money traders excited. And those are the traders that move these markets. So if we can't get the buyers excited at these shallow pullbacks, we're not going to have that edge by having all those buyers at our back. So we have to do something else. We'll do something else to get some sort of edge, to get some sort of catalyst. And to do that, we need to trap in the sellers who are trying to sell. Right? Make sense? If I'm going to buy a shallow pullback, I need some sort of edge, and I'm not going to get that edge from the buyers. The buyers are not going to be there enough. What I'm going to do is trap in some of those bears, and that's exactly where a two-try trap comes in. Bears try once, bears try twice, and that trap, that's the one that you want to find. Now, this pattern should look pretty familiar, guys, because right there, right? That's the same exact pattern. We pop lower, bears once, bears twice, right? Little trap below that low. That is the exact same pattern setup. The one big difference on this is you're going to want to get just below that low. Right? Get some, as we say in our trade room, get some fresh blood, right, in the market below that low there, right? Get some bears trying once, bears trying twice. That's a good trade. It's a good trade. It's a very selective trade because we have to be very selective in that area because, again, you're not going to have a lot of buyers excited about that trade. Now, as we go lower, yeah, this is a lot more desirable location. But here's the downside of that deep pullback. The downside now of that deep pullback is now we have that same thing that's benefiting the buyers right now will actually be a hindrance to the buyers here. We go lower, we go higher, and now as we rotate off the high, this creates quite a bit of short-term, right? Short-term bearish momentum. And so you have to think now, if this market was to go higher and then roll all the way down, you know what's going to happen. There will be a lot of bears coming in. Remember, long-term bear trend, and they're going to want to punch this thing and reverse this thing. Right? Again, look at a daily chart. Look at a 4-hour chart. We are still very much an overall bear market right now. And again, the Fed has told us time and time again, they are engineering this to crash these markets. So it's not a surprise, right? The old saying, don't fight the Fed, right? We know we're going to have some bears coming in there. So as we go lower here, yes, I do have more buyers that I like to be buying with there, right? We got a lot more buyers interested there, but now we get the problem of having more bears in. This is exactly where you look for a two-try failure into a first pullback, right? It's a very easy trade. Again, we want to rope in some of the bears. Anticipate those bears are going to be beating their chest. They're going to be really excited to get that short. Let them try a couple times here. Once they do, think about now where their exits are. Now, if I can get a trap below that low, absolutely. Mwah, that is a gorgeous, gorgeous buy setup right there because now you've got the bears all trapped in. You're buying super low with a trap. That is probably the best possible entry we can get down around these buy zones. And again, this will also apply to the NASDAQ as well. So as we get that move lower, really what I always do is I think about, okay, if I can get those two tries for the bears, what I do is I go out and draw a trend line off that high bring it off that low, right? And then try to find the entry with that signal, right? Coming off of that little hidden channel, right? Draw it off the highs, pin it off that low. It might not be a trap low, right? Like I mentioned before, but still very, very good entry as we go higher. Now, if I can get that signal going higher here now the bears are knocked out. Where's the market want to go? It's going to want to go right back up and take out that high. And now, as you guys know, the way momentum works is it can really run pretty aggressively. Okay, here's the next trade now. Now, as it goes back higher now go out and think about drawing a new channel off those highs. Bring it down off that low, and you know the drill on this one. Drill down, find some prior swings. I always tell my students, you want that first test off the low of that new channel. So as we go lower, again, a lot of buyers down here, but also a lot of momentum now for the bears. I love this location on both the NASDAQ and the S&P. Big time support. Remember, that 51.25 is a prior high. So you can't find any better spot to buy a dip right now than around that 51.25 area. Trap in those bears, use their stops as fuel, right? That way you get that nice strong punch going higher there, and then grab that trap, that failure, that pullback, right? And we try to go back up, take out those highs here. And then from there, this is where those 4 breakout patterns come in. Right, this is where that 1, 2, 3 breakout, right? That pop and grind breakout, that big move, that deep pullback, right? So don't be afraid to go into those 4 pullback or those 4 breakout patterns as we make that blast going higher. Okay, so think about that. We talked about that earlier on the NASDAQ. Now, last but not least here, how do we sell this thing? Right? How do we sell this thing right now? I don't like the short at this point, but if I can get this thing to take out those lows, if those bears can come in and not try twice and fail, but if those bears come in now and really blast, right, and run this thing lower, we have no choice now but to go back to that long-term bear bias now. This, again, anytime I see a breakout that holds the pullback and then blasts off that moving average, that's a 1, 2, 3 breakout. Now, I think I've made it pretty clear here. I can't sell that first pullback. Right? I can't sell that first pullback, so you'll be a victim of that, like that one right there, right? You can't sell that first pullback. However, again, if we can get that strong move down, take out those lows, now rope in some of those buyers here, right? And then blast them out with that strong move down, easy. 1, 2, 3 breakdown. First things first, find that channel, or from the trend line, mark that channel, grab that trap, grab that failure above the moving average. Sometimes we don't get the trap level right. Sometimes all we get is that failure. And then again, don't forget, right? First leg, third leg is going to give you a very easy way to fine tune that exit. You know, if the bears, if they got their way tomorrow, they'd want to take this right back to that low a day, right? It's 86 on the S&P. What is it on the NASDAQ, right? On the NASDAQ, the bears have, I would imagine, that 56 there. That's that prior swing high. That seems to be a very, very easy argument there for the bears. On the NASDAQ, take it lower, hold, break down, right? Find that channel and go short from there. That's a very easy objective to think the NASDAQ will have as well. Back to our S&P though. Okay, back to S&P. That's one way, of course, this thing might reverse. We also could say something happens overnight, market pops lower, grinds down, right? Probably not going to happen, but hey, we'll see, right? You want to make sure you're ready for everything. Remember, I have no idea what's going to happen tomorrow. Neither do you. Anybody who says they know what's going to happen tomorrow is either unfortunately naive and hasn't been around the business long enough, or they're simply lying to you, right? Or maybe both, right? It could be both too. But nobody knows what's going to happen tomorrow. Not in the world we live in these days. So strong pop down, begins to grind going lower. Who knows? If it does, now we know how to find the entry. Mark off that trend line low, find that channel high. And again, what I always do is grab those swings, right? Get above those swings here and grab any of those entries off the high of that channel. First leg, third leg, give you a very, very easy way to attack that final target. So now we're looking pretty good now. Now we know how to buy it, right? As we're as we're going lower. Be very careful trying to sell into these highs right now because you got that momentum coming off of that low. I've been burned way too many times in my career by having a bullish move. I'm buying it off that low and then trying to sell it up here. And the problem is, you try to sell it up here, you get all that bull momentum. You can get a great short signal off those pendulum swings, and the market just laughs at you, right? And keeps on going. Very difficult to short this thing on that pendulum swing. We really right now need to get this momentum back under control here for the bears before we start looking for picking tops here in what has been a very bullish market the last couple of days here. I think we've covered all the different scenarios now on the S&P, the buy side, the sell side. Game plan is all set. Let's wrap this up here tonight now over on the oil. Now remember, we've got a big news report coming tomorrow. One of the biggest news reports of the year, you could argue, because tomorrow is the day we find out how many. They're going to cut production tomorrow. OPEC is doing right now what the Fed should have been doing a year ago, right? OPEC sees the writing on the wall. They know the recession's coming. They know the Fed is engineering it. If they don't cut production right now, there's a very good chance oil will tumble hard, well below 75, possibly back to 50, even those 40s. If you look at some daily chart levels, waiting below. So big news coming tomorrow. We got a bear bias overall, right? 4 key insights here on oil. We do know that. Again, look at a daily chart, look at a weekly chart. We are very much bearish overall. OPEC knows this. They're talking about that tomorrow. And again, think about 7:30 tomorrow morning, right? 7:30, 7:45, we should hear that OPEC announcement. Be aware, it does tend to get pretty wild into those announcements. So, the only kind of problem we have tomorrow is we may have to sit through some chop and slop around that announcement tomorrow before we get some clean price action to work with. So if things are whippy, if things are wild, it's always best to save your capital for the following day, live to trade another day, right? So please be careful with your risk tomorrow around that news when it comes out, 7:30, 7:45 Eastern time. The big clue right now is this bullish range, right? The bull range is the big clue. We're bullish right now into a trading range. If you've watched this video up until this point right now, you know kind of what to expect, right? You know the buyers are going to want to pull back, buy some support levels, love this 85 area, as I mentioned earlier, and then look for a retest of that high and potentially blast up through these highs. And you got to think $90 a barrel. You got to think 90 is a very reasonable objective. I've got 89.71 is that next big top. But if they take out 89.71 tomorrow, you got to think they're going to give 90 some love as well. So I would imagine 90, oil likes to make these $5 moves. We go from 85 to 90 or 85 back to 80, right? So the buyers would love to get that. We may not get the pullback, right? We may get that breakout going higher. The market may break out and run higher here, right? So we definitely have those 4 breakout patterns on our radar here for tomorrow. The kind of fourth clue here right now, you can kind of see it right in front of you. It's that big multi-day channel. If you really widen this thing out here, and I'm not a huge fan of using multiple days information, but this one's a little bit too difficult to pass up, right? We get that gap up that we saw, popped up, pulled back, strong move. It's kind of like one of those 1, 2, 3 moves I keep talking about on these videos. Mark off that high, mark off that low, and there can be a lot of buyers who love that area. I would imagine you're going to see buyers coming in. Well, again, this all hinges on the OPEC announcement. This all very much hinges on what we hear from OPEC tomorrow morning, 7:30, 7:45. But think about that 84, 56 area, really this whole area right here. That whole area. What I would love to do is I'd love to get that nice sharp pullback. I'd love to trap in some bears who are thinking this is a reversal. It's not a reversal yet, not until they hold it and go and use their stops as fuel. If I got my way tomorrow, right, if there is a trading god up there looking down on me right now, if I got my way tomorrow, I would get OPEC out of the way, let them shake and bake a little bit, get that deep pullback, trap in some of those bears around some of these key areas of support, and then it should be a pretty easy run back up to retest those highs. Now, speaking of that pullback, when you want to think about is right now is, again, we've got 2 zones. One zone is right there and one zone is right there. Now, If all we get is that pullback into the trend line and into that first zone around 85.5, what you can do is you can use that failure into pullback combination. It's not going to be a very deep pullback at that time. So momentum is not going to be an issue yet for the bear side, right? The bears are not be very strong at that point. If we can get the bears come in trying to sell short off the moving average, now we know, again, as I always say, we know where their stops are. We know where their pain is. And we can use those stops as fuel now for a failure. And then oftentimes the market will go up, and on the way back up to retesting these highs, we get that beautiful pullback combination. You'll learn a lot about these in that free trading course I mentioned earlier. It's a seller failure as bears get fooled coming in off the moving average. There's a great example of one right there. We pull back, bears try, and they get punched going higher here, right? It's the same exact pattern we're looking for around that 85.5. Failure into pullback combination, and again, looking for that retest of that high. And then potentially, do we see one of those 4 breakout patterns that we talked about way back at the beginning of this video? That is something you want to keep your eyes on. Now, what if we get lucky? What if we get that strong shot lower here? Remember, this is the one you really want. What's the problem though? What's the problem? Remember, we always talk about how's my location and how is my momentum. Location is fantastic because it's a nice deep pullback. I can risk small for a big juicy reward. It's a fantastic place to be a buyer. That looks great. The problem is momentum. Momentum is not going to be as bullish anymore. If we get a strong pullback, strong deep pullbacks are great for risk reward. They're great to make a big return. The problem though is the odds aren't as good because there's always a trade-off between the odds of success and the momentum of the market. Ever noticed that? There's always a trade-off between the odds of your winning trade and your risk-reward ratio. The more potential reward, the lower the odds of success are going to be on that trade. Think about that as you look at your own charts over the next couple of days. The bigger the potential reward, usually the lower the odds of success are going to be. So we know that at this area. What's my problem? My problem is the bears. The bears are going to see this strong move down. They're going to want to retest that low, and I have to respect those bears because after all, it is a long-term bear trend right now. Easy. Let them try twice, right? Let them try twice. Now again, if I can get a trap, below that first low, that's always the best one, right? It's always the best one. Not required, but definitely not frowned against, right? So if bears will come in, if I can get bears trying twice there, I now know where all their stops are. Once I get that nice juicy signal, I can buy into stops. And then one of my favorite trades on these deep pullbacks is on the way back to the high, add a little bit more to the position with a trap. So 2 try failure, and remember, see if you can find that channel, right? Find that channel off that high, bring it down to that low, get right below a prior swing. Great way to add a few more contracts onto it. Great way to add to your position or get back into your position on the way back up to retest the high, right? It's a 2 try failure because of the deep pullback. And then, of course, that trap off that low. And again, I like traps. You can use traps, failures, pullback combos, whatever you want, right? Whatever gets you in off the low of that channel. And then before, obviously, if we do take out that low, if the bears do come in and hold that pullback and blast this thing lower, you got it. Find that low, mark that channel, right? I'll try not to repeat myself too many times more on this video, but we're looking for that short right off of that high. First leg, third leg will give you a very good idea of where the bears are going. If I had to guess, if the bears were taking this thing lower tomorrow, if I had to guess, there's a big range back there around 82. So 82 is a very good target for the bears tomorrow. If the bears get their way tomorrow, they'll be making their way back to 80. Pit stop at 82. And of course, again, big round number, right? $80 a barrel is a very big objective there for the bears. But again, OPEC report tomorrow, OPEC announcement. Markets don't usually go lower, but hey, who knows, right? Who knows? Maybe OPEC says, you know what? We are undecided. We don't know what we're going to do. We're going to kick the can to the road, right? I would imagine that would be a bearish clue or a bearish signal for the oil markets. Now, what if we don't get that pullback, right? What if we just blast higher here right now? Do I sell it? Not exactly. No, we're a little too bullish in the short term right now. What you could do is you could, as we go higher here, and this also, by the way, would apply to the S&P and the Nasdaq, so I'll give you guys a treat, whoever stuck around to watch this video all the way to the end. We, of course, right, we talk about those 4 breakout patterns, right? Let's say, for example, we get that 1, 2, 3 breakout going higher. We find that hidden channel. We buy that pullback off that hidden channel, and we retest the high. Then as we pull over here, now the buyers come in, they try once, they try twice, and now we can use their stops as fuel for that reversal. We call these double top reversals in our trade room. So imagine now, right? Imagine again, there are 4 breakout patterns going higher, right? Imagine now it pops up. Let's get rid of this big channel here. Just keep it simple. It pops up, it grinds, right? It grinds. Easy, right? We find that channel high, we mark off that channel low, we drill down. This is a 1500 tick chart. We drill down, find those swings, we trap in those bears, and we what? And we go back up to retest the high, right? So if we don't pull back, we break out higher. That's exactly where I'm looking for the next long trade, off the low of one of those new breakaway channels, okay? Now, once we retest the high now, all of the smart money is buying low. So now as we go back and retest the high, mission accomplished, the buyers now come in. These are the weak hands, right? These are the inexperienced traders. Now they begin to buy right into those highs. Okay, I see buyers now try twice. Remember, lower lows on the 2 try entries. We talk about a lot of this in our video classes, right? We call it entry counting in our video course. 1 try for the buyers, 2 try for the buyers. Think about those stops, right? And now we can, again, remember, at this point, we're still very bullish, but now the smart money's already in. They're getting out. Right? They're getting out. They're taking their profit off at that high. And then all the dumb money, all the weak hands, all the inexperienced traders, the brand new kid at the poker table who wants to learn to play, right? That's who steps in and buys that shallow pullback right now. Stop. Remember, the market's bullish at that point. We're not going to get a lot of bears who want to sell in a bull market. So we have to compensate for that edge by using stops, right? We have to compensate for the lack of bears out there by using the stop losses of the buyers to get that jump, right? Get that juice going back down, right? Makes sense? I'm always thinking about right now, right? For example, that's a great example of how the bigger the potential reward, right? It's a very big reward trade. The bigger the potential reward on that trade, the lower your odds are of success. So we have to be able to rope in those buyers, use their exits as the fuel to go lower, right? Because we are so bullish in that scenario. Again, that little song and dance right there, that setup, right? That breakout, that double top retest, and that 2 try for the buyers and that short back down off the high, all of that can be applied to the S&P, the Nasdaq, and also definitely here on crude oil. All right, so keep an eye on those 4 breakouts going higher, and hopefully we'll get that nice deep pullback, trapping some of those bears and right back up. The big question for tomorrow is when will OPEC, when will they get the announcement out to us? It'll probably be sometime around 7:30, 7:45, and hopefully they're not going to, hopefully they don't completely trash the chart and we can actually trade it tomorrow. If it's really, really choppy, they'll want oil tomorrow. Remember, live to trade another day. It's not worth forcing bad trades. Wait for better trades the following day. And if you don't know what a good trade looks like, if you don't know what good price action versus bad price action feels like, that should be a very good sign to you to not be trading real money. Practice on a demo. Come do it with me in the trade room, and I'll show you what good price action looks like. I will show you what almost guaranteed winners look like. We do it every day at 8 o'clock Eastern time. Guys, if you're here for the first time right now, I would definitely recommend grab the free course to begin. That will teach you the fundamentals of how we trade in our trade room. It'll also get you making money on your own account, and then when you're ready to take your trading to the next level, I'll be there with you in the trade room every morning at 8 o'clock Eastern time. I'll put all the membership links in the description of the video. Also, don't be afraid to call the office. I'm always here to stand by to answer questions about brokers or data feeds or charts or whatever the question might be. I know I go pretty fast in these videos. YouTube likes me to keep these videos relatively short, but I'd be more than happy to slow things down, go over all the bases you got to cover, and get you ready for trading in our trade room as a brand new student. The easiest way to get help is to email or call or use live chat. And as always, you can drop questions in the comment section below. All right, guys, thank you so much for tuning in. Thank you so much for watching all the way to the end. You are the people, you are the person I do these lessons for, the folks who are committed and watch all the way to the end. So thank you so much for sticking around all the way to the end. Hope you enjoyed the video. Tomorrow morning, 8 o'clock Eastern time, I will see you in the morning trade room. If not, we'll come back tomorrow night. We'll do it all again and get ready for a big Thursday, Friday as we go into Non-Farm Friday. Guys and gals, be well, be nice to each other, and be here next time, will ya? Adios, amigos. Bye-bye for now.